All right, what's going on, guys? What's going on? So today I'm going to be doing something a little bit different. This is going to be a video that you guys probably want. A lot of you guys have probably thought of this yourselves and thought to yourselves, "Oh, maybe I need help with this." So today we're going to be going over drawn liquidity. Now, drawn liquidity is honestly a pretty simple concept. A lot of people tend to overcomplicate it for whatever reason. I don't understand, but it's really that simple. The market can only go two ways, right? So basically, if we can look over to the left here, I've been up all night, pretty much just forward testing London session, just seeing, what price is doing and how I can take advantage of this. I have a rule not to trade London session with my real accounts and all my funded, so unfortunately these are all demo, but still trades, still reps, so I'm still getting some practice in. But regardless, let's get started with the video. So basically, really what you're looking for when it comes to drawing liquidity is just areas in the market where a lot of buy stops or sell stops are, basically points of liquidity, right? And following the daily profile or a higher time frame, or following the higher time frame when you take your trades, right, aligning your trade with the higher time frame is ultimately what you want to do. But of course, you can still catch retracements, right? Retracements in the opposing trend, and still make money that way, right? But just going into London session, right? If we just go to a higher time from here in the 1 hour, right? So I started around 2 a.m. So around 2, I noticed that we already have traded into this 30-minute fair value gap and also traded into this 15-minute fair value gap right here that I have marked out. And that happened right at 1:30. So when I see something like this and I notice that, right, we didn't retrace into equilibrium of this range. And the reason for that was because of this 15-minute imbalance holding us up. And then if you look over here on ES as well, you'll see that, I believe it was right here. Yeah, we also had a bullish SMT with ES here as well, which was another confluence to tell us why price wanted to go up and why we did not want to rebalance to equilibrium at that point, right? Usually when that happens, if we get some sort of SMT while we're already sort of halfway through the trend or going up towards some drawn liquidity, we'll end up taking that drawn liquidity, hitting that level, which in this case was, you could say consequent encroachment of this gap, whatever, -2 deviation, right? Anything basically. But actually we ended up having an SMT, which then drove us down into that discount. As you can see, I'll go ahead and mark it out so you guys can see it. So from this low to this high, or sorry, not that low. Where was it? This one right here. Boom. There we go. This low right here. And the reason it's this low is because we have a low here and we have a high here. So this was originally a range from this low to this high, which created a mitigation from this high to this low. So low, high, higher, low. This was our mitigation that we traded into. And this was the end of the leg, because we traded up into this level here with this this opening price, this candle, traded back down, and we basically just edged the low. There's other PD rays that we probably tapped into to support price up, but that moved down, and then this move up to take this high created our new range. And then as price started to go higher, we start to form our real range. So now from this low to this high is a range that we tap into, equilibrium hit, and whatever else that needed to be hit. And then of course we pump back up. So at this point, when we're looking at our drawn liquidity, right, we're looking here and we're seeing, okay, we have these equal highs. Equal highs are a very strong point of liquidity, right? Equal highs, not so much during London. This time it just kind of made sense because it was like the only equal highs. Usually there's a lot, but at this point I was like, okay, equal highs, it makes sense. It's following the trend, following order flow, all that good stuff. And that's what I was looking at for the drawn liquidity. Equal highs were the draw because I was watching price. I was saying, okay, we're in a discount. We tapped the 15-minute. We have a lower time from SMT. We have a higher time from SMT with these lows here as well. It just makes sense for price to want to trade up to those equal highs as the draw on liquidity. And then same goes for when you find a point of reversal, right? This is our point of reversal here. We hit the 2 to 2.5. Really the only thing we could go off at that point, because there was no PD raise to kind of frame anything off of, because we don't know where it's going to reverse inside this gap, unless you have consequent encroachment marked out, whatever the case is. But from there, now that you have some sort of reference as to where it's going to reverse from, all you have to do is wait for confirmation that we're going to go bearish. And then it's as simple as just locating, okay, we have this low here. This is a draw on liquidity for bearishness. These could be a draw on liquidity, but until this 15-minute gap is inversed, they're not draws on liquidity. See what happens? We come down to the 15-minute into discount, and we trade right back up. Probably going to go to this high. And that's what I'm just in a paper trade right now. I'll show you my executions in a second. I just went ballistic during London, just taking every possible setup I saw that was decent. So yeah, that's pretty much what I did. And then I also wanted to see this deviation level real quick. Right here. Okay. That makes a lot of sense. That makes a lot of sense. Okay. Let me just adjust this. Oh my goodness, bro. I'm trying to adjust this level here. Now I'm just going to redo it. Here to here. Two and a half. I'm trying to look, because sometimes I still get confused on which deviation to mark, because obviously this is our leg up here. Boom, low, high, higher, low, higher, high. But these are equal lows, and it's not really like a strong swing point. So, I mean, if you look at it from this point right here, right, we didn't even hit -2. We hit the -1.5. But then if you move it over to here, then it makes more sense, because we hit the -3 to 3.5. So, I don't know. Maybe a higher time frame, it makes sense. Actually, yeah, I guess the 3-minute. Yeah, that makes sense. Yeah, the 3-minute had it. Okay. Yeah, and then look at that. -3 hit into, you guessed it, that 15-minute gap. And then you don't take this one because there's no SMT. And now we have our SMT, right? We trade up, trade back down to equal lows. ES actually takes it right. I believe it was a different candle, yeah. Right here. And then I guess you could just take this fair value gap. Or we could wait, but I ended up seeing that. I saw this 5-minute gap here. We inversed this 5-minute gap while leaving this 5-minute gap. So we have a balanced price range right here, which I didn't expect price to come back into because it's balanced. And then ES actually took that 5-minute gap right here as well. So that's kind of a little divergence there. And then we inversed this one as well. No tap back into it, surprisingly. I feel like I was thinking we will at some point come back and tap this, but I guess not. But yeah, that's all I'm looking for drawing liquidity. It's really that simple. You're just looking at levels on the chart and seeing, okay, are we respecting bullish PD raise? Are we disrespecting bearish PD raise if we're bullish, right? And vice versa for the other. Just watching price, being patient, not taking every little thing. That's why sometimes going on the 5-minute can help you out a lot, so you don't get confused as to what's going on. But if you've been trading on the 1-minute for a while, you have a good understanding, it's really not that difficult. You can get the hang of it pretty easily. I just always look for SMTs for reversals. That's really it. And internal SMTs, lining shit up with equilibrium, OTE, whatever else I need to line up shit with. So real quick before I end the video, actually I'm going to show you these executions, and then I'm going to tell you a couple other really strong draws in liquidity that you should know. So basically this is what I was looking at right? I just want to make this quick and simple. We have our 15-minute gap. We trade into that 15-minute gap right here. And then we SMT with these lows right here. We trade above this high 5-minute change in state of delivery. We leave behind a fair value gap. I enter on that. All this price down here is balanced, so I don't expect price to retrace to equilibrium at all. So now at that point, I'm just expecting price to go to liquidity. So I get that entry there. I entered early here, and then I entered again on this gap, and I took partials at this high because this high here was SMT'd. And what I've noticed a lot on the charts is if we come up and we take a high that ES previously SMT'd with before, because this high was not taken, or this high was taken on ES, and obviously not here on NQ. So whenever I see a high come up and take a high that was SMT'd, sometimes it reverses back, rebalances, and then goes up and take it, and then goes up and takes it. So that's what I did. I partialed there. I moved my stop to break even, and then we ended up coming up and trading straight towards those equal highs, which is what my target was. And then of course we rebalance price to what? We rebalance, boom, here to this 5-minute gap. ES tapped it as well, and then we also have this breaker block that we tapped here as well. It has this wick, right? Didn't really want to trade too far into it because of this, I guess this breaker acting as support. So really there was no need to dig into it anymore. And also if you look on the 1 minute time frame, let me just move this over a little bit. If you look on the 1 minute time frame, you'll notice as well that ES actually took this low here and NQ didn't. So there's an SMT there, while we're also trading into the 5-minute fair value gap. And that's also why we didn't trade into a discount, is because of that SMT and this breaker holding us up to support price higher. And then of course we got a nice displacement move higher above all these highs, and then we got a nice change in state of delivery on the 5-minute. I put an entry on the actually I had two entries, one on the change in state of delivery if we come back and tap the order block, and then I had one inside this volume of balance as well, so you could see that one there on the black line and then one there in the volume of balance. And then I took that up. I wanted to see this, I think it was a new week opening gap, and I wanted to see this -2 deviation get hit. What I didn't realize, or I did realize at the time, was demo. I didn't really care, but we hit the 2 to 2.5, and we also SMT'd at the highs. So I knew price was going to come down, so I just moved my stop to break even. I got stopped at break even, and then I noticed that we displaced below this 5-minute gap right here, and then we also had some breaker, this little breaker on the 5-minute. So that's what happened. You can mark the breaker out in the 5-minute, drag it out, and then price actually, excuse me, and then price displaces below this low. We trade up into that breaker. You see the line right there? We trade up into it, leaving behind a breakaway gap because of that breaker, and also because of this. Oh, never mind. I thought I saw something else. But yeah, we left that breakaway gap because of that breaker there. And then, as you can see, also we inverse this 1-minute gap here, and also this 1-minute gap here as well. And that happens right on this candle. Push back up to rebalance that, to tap into this inversion, and then trade lower. I got in here short on this 15-second gap, and then I just targeted the swing low that was just there, just for a little scalp. And then, of course, I'm expecting some sort of retrace, right? Because we have this low here that ES actually did take. So now I'm expecting some sort of retrace back up into this 5-minute breaker here. All right, so we had the breaker here originally, and then on the 1 minute, that breaker tapped it to the tick, which shoved price down. And then we got the real breaker tap right here, right, with this wick. And also, sometimes, if it's really efficient and clean, it'll also line up with equilibrium, which in this case it does. So perfect. So from that, you could easily frame a short now. Because what price is telling you, okay, we're off the breaker, nice rejection. We already see displacing price in the opposite direction. With a clear draw, also another, I think, new day opening gap. Clear sell side down here, and then also the standard deviation levels have yet to be hit, especially this one right here, because we edged it by like a couple points. So price trades up and closes below this gap here, and also this fair value gap down here. So you could either take this inversion here, or if you miss that, you could take this inversion, because the draw, I mean, it's very, very clear where price wants to go at this point. And really that's it. I mean, you could take a trade here off this inversion, catch plenty of points, and you could also get out at this consequent encroachment of the 15-minute. And that's exactly what happened here. Boom. And then, yeah, we got the, I believe there was, yes, SMT here at the lows. SMT here as well. Push up. We broke above this high. Also displacing above this 5-minute fair value gap, creating an inversion. BPR. Price doesn't want to trade back into that because it's balanced. And then if you just take this high to this low, we are displacing heavily through equilibrium. And there's a clear leg to mark the deviation on. And then now I'm just waiting for price to hit. So yeah, the best draws on liquidity now, if you stay to the end of the video, because all this stuff is very educational. I do not want you to skip over it and just think you don't need it. This is very important what I'm teaching, and it works all the time, clearly with these executions, although it's demo, I know. But the strongest draws on liquidity, equal highs, new day, new week opening gap, volume imbalances, pretty strong too, especially on higher time frames, and previous day high, previous day equilibrium, and previous day low, and midnight open. Those are the strongest draws on liquidity from what I've seen personally with my own trading. I'm sure you could go back test it and find out that it works for you yourself, but that's really all that I have for you guys today. If there's anything that I left out, or if there's anything that I can improve on in terms of a draw on liquidity video, I can go ahead and make another one to explain it a little more in depth. But I feel like it's a pretty simple concept overall, and there's no need to really overcomplicate it. I'm just giving to you from what it really is, what draw on liquidity actually is, how to find it, and how to take trades to or from it. So yeah, that's pretty much it. This trade looks like it's gonna hit any second now, but yeah, guys, that's really all I have for you guys today. I'm planning a whole bunch more free content that I'm gonna give out to you guys. Also, make sure to go ahead and join my Discord. It's totally free. I live trade as much as I can in there. I usually send signals, but a lot of the time I'm super locked in. I'm not always live trading, but I'm going to start getting into that a lot more. So make sure to join up. I'm going to start being a lot more active in there. Y'all need to start being a lot more active in there too if you are already in the Discord. I need to see some activity. The trading chat is just dead. But yeah, that's pretty much all I got for you guys today. I'm not going to wait to see if this trade hits or not. Probably is. But that's all I got for you guys. I will talk to you guys in the next video, whatever I got going for you. And yeah. See y'all in the next one.